So it's at that point, the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is it's the cyclical trend within a secular trend.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin. According to Raoul Pal, if economic growth is going to slow down in a year, they'll either be printing money or lowering interest rates because this happens in cycles rolling over this debt. So you should buy more at these prices because that's when the next upside comes in. Raoul Pal always said that it's the cyclical trend within a trend over time. Okay, this is a sure thing. Most people won't know the difference. So secular trend is a long-term trend caused by a big A factor crypto. Bitcoin is an alternative to the current financial system, and over time, number of people who use it and learn about its ability, it's a long-term trend that more people are moving across, and it's really how important is the annual trend. The cycle is the EB, and the flow inside that means that the economy isn't at a huge bust level, but at a boom bust level. Now it's just a boom bust. All of this fits with Bitcoin harvesting cycles, which is why maybe there's some magic in that drop in supply. But Bitcoin came out anyway. All interest rates dropped to zero at the same time. They are all part of the same trend, and lots of things Raoul Pal discuss, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
So if with Bitcoin, I treat it as an asset that is going to protect my long-term wealth. And that sounds crazy when it goes up and down like it does. Right, and you've just gone through that full first cycle, and whoa. But what you'll find is the low is higher than the last time it hit the bottom, and then the next low will be higher, and each high is higher. Oh, it's in an uptrend. So I just don't need to sweat about the ups and downs. What I should do is just accumulate every time it's in a down cycle. Why? Well, because the down cycle is signifying that economic contraction is happening, and that the world is slowing down and money's being taken out of the system, quantitative tightening, which is the opposite process, and assets fall. And interest rates are going up, so your disposable income's going down because your wages aren't going up enough and the interest rates have gone up more. So it's at that point, the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is it's the cyclical trend within a secular trend.
Okay, this guaranteed people do not know the difference.
So secular trend is something long-term trend driven by a large explainable factor. Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. The cyclical trend, the cyclicality, is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero.
According to Raoul Pal, Bitcoin is exponential, which is why its charts keep looking like this over time. On the other hand, the S&P 500 doesn't do that because it's not exponential, but the Nasdaq does what most tech companies do, which is why a lot of times Nasdaq does better than the S&P and value stocks. It's all about getting people to use new technology, which makes them very angry if you think about what's been moving the Nasdaq lately. It's the use of AI, which is the fastest usage. It was the fastest technology in history before this. But this has now surpassed it in just 6 months, from almost no users to 100 million users in just 6 months. Let's back to the Raoul Pal interview.
They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric, or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential. But the Nasdaq does. Most technologies do. And the reason why the Nasdaq keeps outperforming the S&P and keeps outperforming value stocks and makes people so angry is because it's all about the adoption of new technology. If you think about what's been driving the Nasdaq recently, it's the adoption of AI. Obviously, that's the fastest adoption of any technology in history. Crypto was the fastest beforehand, but this has eclipsed it. It's gone from, in 6 months, from basically 0 users to 100 million users in 6 months. It is, and we'll come on to that in a sec, but Metcalfe's law is the number of nodes on a network, i.e. number of users of crypto, versus the number of applications in the interconnection. So the more we build out a Web3 world, the more that's the multiplier as opposed to the people. Initially, it's the people who use it. So like Doge has no use case apart from memes, memetics, but it has a bunch of users. Bitcoin has limited use, but a huge amount of users as well. But the use case is very clear, which is the scarcity of the asset and the purity of the asset and the security of the network. Ethereum has lots of uses, DeFi, NFTs, all of this stuff, and a whole load of users. So this is what's driving these things. Why are we adopting the technology? That's the productivity equation. The financial system becomes more productive and safer and securer by using cryptocurrency rails. We become superpowers as humans by adopting AI, robotics. We become more productive and ability to do stuff by adopting EV technology. All of this stuff is actually driving productivity. Is the moment, the investment, there are use cases. So let's just get out of the NFT noise and everything else. I'm having dinner with a friend of mine. He used to run the trading operations of one of the largest banks in Australia. It's a big bank, the equivalent of Bank of America. And he's like, he's just retired. And he's like, I've been heavily involved in crypto at the bank, doing stuff. I'm like, what are you guys doing? He goes, we've issued 5 stable coins. I'm like, why? Why do you need the stable coins? Why not use Tether or USDC or whatever? He's like, okay, so this is what people don't understand, why crypto is so important for the financial system. He said, we're in Australia. We have a gigantic pension system. Our pension system buys a gigantic amount of US equities. The US is about to go to settlement. So when you buy a share and you have to pay for it from T+2 or T+3, so that's trade date plus 3 days to pay for the bill, to T+1. Okay, that seems fine. Foreign exchange transactions are T+2. They can't settle the US stocks that they buy. So they either have to leave massive amounts of money with a broker that they dealt with who could go bust or uses the money ineffectively, or they create a stable coin for instant settlement. So they can, and they built that. This one is on top of Ethereum. Okay, fine. But that is a multi-$100 billion use case for why crypto is very powerful for increasing productivity within the financial system alone. And there's many of these all over the place. So why is Tether such a big, useful stablecoin? You basically fractionalize the US dollar and have a person in the Philippines who works in a rice field to receive a payment from his cousin who's living in New York City instantaneously without any cost in dollars, which is the currency that they all want. That's mind-blowing. That's why the stablecoin system alone is so gigantic. So I don't agree with there is no productivity or killer app. The killer app of crypto so far has actually been stablecoins.
According to Raoul Pal, Bitcoin has a very small use case, but it has a lot of users. The use case is very clear. What is the shortage of the assets, the purity of the assets, and the safety of the network? Ethereum has a lot of new features, a lot of people, and all of this other stuff. This is what's making these things happen. Why do we need to use technology that makes us more productive? Math problem. When we use Bitcoin rails, the financial system works better, is safer, and has more secure superpowers as humans by using AI and robots. We can get more done able to do things by using EV technology. And you already know all of this is actually making people more productive. Every vote in a market, Raoul Pal, every time the price changes, is, there was a vote about what people expect now and in the future, so it's hard to say what that means. But Raoul have proven that he can pretty easily boil down Meta's law to describe cryptocurrency as two things: how many people are using it. That makes sense. Those are the nodes, and then the amount of the economic action. And all he did was count the amount of money that changes hands every month last week. When you multiply those two numbers together, you get this crazy, stupidly big number. But when you put that number on a graph, is the same thing as price. Which is strange, because price is not in that law, should take into account the math that you just talked about, how much the network deals are worth. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.